Hello, in this section we will take a look at bank reconciliations and the process of creating a bank reconciliation in both QuickBooks Online and Excel. Bank reconciliations are a very important process of the Hello, in this section we will discuss bank reconciliations and the process of creating bank reconciliations in both QuickBooks Online and Excel. Bank reconciliations are going to be a huge internal control, a big component to make sure that we are not making errors. The second internal control, second only to the double entry accounting system itself. Although the bank reconciliation process is a huge internal control, we don't see as much focus on it in the accounting textbooks as maybe it would warrant to have. And we also don't see as much focus on it when we learn the data input into the QuickBooks system. Both small businesses and large businesses can really benefit from having this added internal control of the bank reconciliation. Also, when we see the problems that will be input, they're often shortened in that we often don't actually see the bank statement or a copy or example of a bank statement and the bank reconciliation or the books in order to compare and contrast. What's often given is just an assumption. Hey, here's the checks that you're going to check off, and here's the ones you're not going to check off, and then the system kind of gives you an answer to it. What we're going to do here is actually look at a bank statement. We'll look at an example of a bank statement that would come from the bank. It's important to note that this is going to be something that's outside of our bookkeeping service that comes from the bank, and we'll compare that to what we have in the system, and then we'll get a good idea of what we're doing here. We're comparing the bank balance to what we have, and if we tick and tie everything off, then we have a better assurance. We have the banks double checking our books for us. The first bank reconciliation within accounting systems such as QuickBooks is often a little bit more difficult because we have to set up that beginning balance in the system, and if there are any outstanding checks prior to that, that can give us some confusions. So we'll do two bank reconciliations, one for the first month, and then the second month, once we have that first month done, is usually a little bit easier to do. However, from a theory standpoint, we want to see on the second month that we'll have those outstanding items and how they will clear in the second month. So we'll run that in the QuickBooks system, and we'll also do it in Excel. In Excel, we will see the typical kind of bank reconciliation. Oftentimes when we learn the theory between bank reconciliations in something like Excel or doing it by hand in an accounting class, it seems a little bit different than when we do it online, because online has a way for us to tick and tie it off within an accounting system like QuickBooks. But the end result will be the same, and we'll be able to match those two things up. Within a QuickBooks system, oftentimes people are good at creating the bank reconciliation and not interpreting it, not knowing how to read the bank reconciliation or really understanding what the importance of it is. And as we go through the Excel, that'll give us a more demonstration of how this bank reconciliation is being created and what those differences are and why they're important, so that when we actually read the end report from the QuickBooks system, we'll have a better idea of what that report is saying and why.